Hello and welcome to week number 22. This weekly review will be covering this week and next week. That means there won't be another market outlook until the 13th of June. So Sunday in 2 weeks. Last week we didn't really see a lot of movement in the market. What really is happening is that volume is dying down across most assets, starting from bonds, and that is all rippling through to the FX market as well. Some of the EM currencies like the ruble, the South African rand, they got a little bit more oomph behind them, they got more power as their economies have got more room for the yields to rise, and it makes investing in those economies attractive as we are in an environment where there is global growth, global synchronized growth actually. That whole helps EM currencies a lot. So if you are in that space, you will find the movements are still quite attractive. Next week we will have, actually for the next couple of weeks, we'll have negative cash flows from the Eurozone. That means there will be more cash getting zapped out of the system than putting out. That is always a good thing to see. If you're bullish on the currency, you find that EUR/JPY does correspond to these figures in the long term. So if you have a negative outflow of this is now calculating on top of my head here about 60-70 billion, you will find that EUR/JPY will find another leg higher usually on these circumstances. Quick look on the CFTC report. This is from the Scotia Bank. Aggregated data here shows that euro longs continue to climb, open interest continue to climb, shorts reduced very little, but longs added quite a good chunk. And same thing on pound. Surprisingly, so a week before they trimmed some longs, which made everybody believe, oh, okay, there's some profit taking going on here. It could continue. If you were thinking in that realm, like myself, you were wrong footed as longs came strong in again and took the open interest not further higher, but it took the net longs higher, and overall that means we are not far away from the 3 billion mark long on GBP. And the other currencies didn't really have a significant adjustments. Notable, obviously, Kiwi last week moved quite strongly because RBNZ started to talk about raising rates next year. Largely that's been in the price now, and going forward you probably have to look at data to extract a little bit more bullishness out of the Kiwi. Just to that, for the following next 2 weeks, I cannot stress enough how important Fed meeting, ECB meeting, NFP are not. So they won't be saying anything that will change the paradigm. Data is not going to print in a way that's going to change or make a huge shift into people's perspective. We are right now in the summer doldrums. We are entering the second half of the year where volume is really dying down, and you see very, very slow grinds across most markets. There is 2 trades I'm interested in actively engaging, and I will be using the FX calendar as trigger points. I won't be using it as to hugely gauge what is happening for these 2 trades I'm about to talk about. One of them is EURUSD. So EURUSD, in my opinion, climbed to a point where I felt like there's no more value for it to climb any higher, which was at 22.40. So it kept pushing up, kept rejecting it, and now comes to a point where I feel like price is telling us that maybe we are just finding a new range for EURUSD. We might not see something like we see here last year, big push up, or what we saw early April, but what we're starting to see in EURUSD wants to find a new range higher. There's a couple of things that is in EURUSD's favor. One is obviously USD depreciating globally against most currencies. Also that euro economic growth is really picking up, so it's outpacing a lot of the other countries, specifically because they came out of the second recession now. And there's quickly a chart I want to show you just to overlay it really. So I said how EM currencies are doing quite strong. So if I were to overlay, for instance, the dollar and the South African rand, and if I were to invert this, you can see that they're largely in line, specifically as we are coming out of the recession, and there's more to go for the African rand. That means there's probably more to go for EURUSD as well. Yeah, if you don't want to eyeball us and you're more like enjoy your qualitative research. You can also do your correlation check here. So correlation coefficient with EURUSD, and now we're looking at USD Rand. Apply. So they have inverse correlation. Obviously I had to invert the chart here for it to make sense. On the daily it looks quite strong. On the weekly should look a bit stronger as well. So you can see these flows that show you always like this maximum inverse correlation. It tends to be very strong. So now it's starting to pick up again. I'm expecting this to become stronger. So it kind of plays into the hand of expecting EURUSD to find a higher range. But I'm really expecting this to be a very, very slow boring grind. There are two data points which are very important. I'm going to cut to the chase. One is US PMIs, which is manufacturing, and the other data point which will come later in the month of June are the US flash PMIs. These are the key drivers for EURUSD right now. Nothing else really matters. So you see a lot of data points and noise coming through, but people say such and such. But really what matters now for market is that PMIs continue to come strong, continue to show there is customer demand, and companies are struggling to get people back into jobs, and companies are struggling to fulfill the backlog of orders. That's what we want to see. We want that sort of hot demand for this to continue. So next week we have US PMI, and we also have ISM services. So coming those two reports are very, very important for me to understand if EURUSD wants to find its next leg higher. So once you see the market reaction to those PMIs, if you see EURUSD end up bullish, you're pretty much safe to assume that EURUSD will take the next month another leg higher in the 123, 124 zone. If you see that next week EURUSD isn't reacting favorable to those data points, and that's regardless of what they print, if they print good or if they print bad. But if EURUSD next week reacts quite negatively to US PMIs and the flash services as well next week, the ISM, then you can start thinking, okay, maybe we have a temporary ceiling here for EURUSD. We should settle down in a lower range. So it's quite an important week for me next week in terms of gauging what will happen for the rest of the month. But at least you know those two data points are really key. And NFP will be just another data point and to create havoc on the chart, but it won't be key fundamental driver for us. So that's EURUSD. We discussed in quite some detail. Next one I'd like to have a look at is GBPCHF, and I'd like to have a look at the weekly, as it makes more sense looking at the weekly, just so we can really make a bit more sense of the range. And let me see if I can take away remove drawings, just have a bit more of a clean sheet. Don't need that MA either right now. This is GBPCHF, so it did enjoy quite a good rally last year. This year it is good as well, but it's starting to come off. So the question rises here, what are we doing? Where are we headed? Is GBPCHF going higher? Is it going lower? In my opinion, it is going higher. We are currently, if you can notice this, in this weekly, we have inside week. So ideally a break above the inside week will start to see us taking higher levels. So maybe a reaction like this, where a bounce back and then starting to attack those new highs. GBPCHF, there will be a trade that will probably play out and pan out over the summer. I'm quite bullish on this. Ideally, the places where I like to enter GBPCHF is on a this is not my ideal scenario. This is a scenario that would make a lot of sense, but I like to be a little bit more contrary on it. I prefer buying GBPCHF on a temporary breakdown. Some bad news hitting the economies, something bad happening about the UK, where people perception and short-term shifts, or just any sell-off really that takes us into lower levels, specific towards 125. I really would like that. If I see levels like this and markets start thinking, oh, GBPCHF maybe gave up this long trend, that's where I like to enter to sort of capitalize on it moving higher. I think this is one of those trades that you can hold for several months, possibly for the rest of a year, if you're gonna get a good dip. GBPCHF is really in a good position where the UK economy is really thriving. specifically in comparison to the euro economy and central bank divergence. So you have Bank of England thinking about raising rates. They might not do it, but at least they're more on the hawkish side, where euro is still far behind, and the Swiss National Bank is not even thinking, not even mention hawking in any of their speeches I can ever remember being a trader. So you're on a good side here, thinking long term GBPCHF long. Again, ideally I would like to see some sort of a breakdown where fear breaks out. You can buy at cheaper levels, and that's better ways to make your business into that trade. So this is me covering these next 2 weeks. I wish you good luck. Again, don't get bogged down by small data prints. Your key datas are for this month all PMIs. That's all that will matter, and that's how you want to trade it. Thank you very much.